All right, let's look at the world of the markets. Asian stocks were cautious this week as U.S. earnings season gets underway. We'll talk about that shortly. Also, a raft of Chinese data will offer insight into how the world's second largest economy is recovering. Now, on the back of this, the JSE has been looking for direction this morning after trading slightly stronger. It has now dipped into the red. You can also see that the rand, which was stronger against the dollar, is now a bit weaker. In focus this week, as I said, the earnings of banks in the United States and data that will show the strength of the Chinese economy. Let's speak to Bright Khumalo from Vestact Asset Management. He joins us. You'll see him behind me. And Bright, there's no major data from South Africa today, so really are we being buffeted by what's happening internationally?
Yeah, I mean, it's earnings season internationally, so it's not really a bad thing. We like earnings season. We want to see, the health of these businesses and how they're performing. And so far, we've seen, companies like JP Morgan, Citigroup, coming out with, really good earnings, with the former up 7.8% on the news and Citigroup up north of 4%. And the banking index, or the financials index in the US, was up on Friday, which was quite interesting considering the fact that it was a down day. And obviously this week we're going to see more earnings coming out of the likes of J&J, Netflix, and Tesla. And today in particular, you will see earnings from the likes of State Street and Charles Schwab. The reason why I mentioned Charles Schwab is because they're down over 45% year to date, because of that banking contagion we saw earlier on, I think about 4 weeks ago. So let's see how the earnings look. Maybe they might catch a bounce here.
So talk more about the banks. I understand it's JP Morgan, Wells Fargo. They were looking good, but I think this week it's Bank of America and Morgan Stanley. Do you agree that the banking crisis that could have been after the Silicon Bank went down and another bank has largely been avoided?
Sure, that's a hard one to say, with determination. But I mean, if you double click in those JP Morgan numbers, they reported a record quarterly revenues and a 52% leap in profits. So, for example, I mean, that doesn't show any signs of, cracks in the system, if that's what you're looking for. That's why maybe for now, I could say the cracks were in particular small regional banks as compared to the bigger conglomerates, that not only have lending, but they also do other things like asset management and investment banking, most importantly. So those are the banks that look and feel like they were down in tandem with the other ones, but their operations are actually doing well.
And then you mentioned some of the other ones. I was looking at Johnson & Johnson because it's been embroiled in a scandal. Netflix, Tesla. How's Tesla expected to do? You can mention any of those three.
I mean, calling Tesla's earnings is very hard because it's very binary. But if we take the most recent numbers, because they always release their deliveries before they release their earnings, it's going to be a decent one. It's mostly priced in because we saw those delivery numbers come out on Tesla, unless there's a surprise we don't know about, obviously. On J&J side, definitely that I think it was, I'm going to get my numbers wrong here, but it was billions of dollars, north of $4 billion settlement is definitely going to hurt profits. That's also priced in those numbers. Hopefully there are no further surprises in that, because I mean, you buy J&J for the stability and the dividend. And if these scandals keep coming, every second year, and they have to settle, multi-billion US dollar cases every single time, it's not going to end well for long-term investors, because it does make a dent on the share price and the dividends that they're going to pay, because that's where all of these monies are going to come from. So that's not what you want if you invest in a stable company like that. Netflix, there might be a surprise there. So that one is going to be an interesting one to watch, because Currently, the Nasdaq is up north of 17%. Netflix is up as well, but it's not up as much as other tech companies. Maybe there could be a catalyst there to see some price action.
All right, I like the way you phrased it. You'll be watching Netflix. Let's end with China, because a lot of data coming out of China this week, I understand. It's crucial for us. China is a big importer of our commodities. What are you expecting there about the health of the Chinese economy?
So today, the People's Bank of China kept their key lending rates unchanged, and they made the smallest net injection of liquidity to the system since November, because in Asia, unlike the West, where we're seeing a lot of monetary tightening or interest rates increasing and the likes, they're still recovering from COVID, and they just opened up at the beginning of this year. So they're still talking about quantitative easing, and that's what we're seeing there. When I was talking about the smallest net injection of liquidity, and they kept their rates unchanged, meaning they're no longer cutting rates, which is a good thing also. But yeah, there's going to be a lot of economic data coming out of China this week, including things like manufacturing data and the likes, and retail data as well. So we want to be watching that one very closely as well.
All right, thank you very much, Brian Khumalo from Vestact. We take a short break. Thank you for that update. And of course, it's all about the US markets, the banking stocks this week, and that very important Chinese data he was talking about. We take a short break.